Okay, hi guys, this is Ray from Next Forex Trade. Today is the 2nd of August 2019. Being a Friday, I am not looking to take any positions, but what I thought I'd do is just recap on some of the positions I've taken, and also some opportunities that we could see going into next week. So you can see obviously I'm flat here at the moment, no positions open. I did have the Euro JPY close a couple of days ago, I think, which I explained in other videos. And we can see what's interesting in this is the price. So this was my entry on this. This was my exit. Look at the daily at this. We can see that the price has gone way off and would have been much more profitable, if you like, in terms of how much profit could have taken off the table on this. I did take out the 1-to-1 on this. We can see here I took one out at break even and one out, for overall about £100 profit. Now, am I upset that this has gone again, in my favor and I could have taken more off the table? No, not really. I mean, I played this exactly as I, wanted to. I had my stop loss above this level. I played the price action. I exited based on what the lower time frames were saying, and in this instance, really, there should be no regrets, no fear of missing out, because I'm happy that I traded this in the way that I did, because I stuck to my rules. My money management was tight on it. I didn't risk more than in fact 2% in this instance, to achieve the goal. And really, that is the first goal with the way that I'm trying to teach this approach to trading to you. It's just to get that consistency. It's to make sure that you are, following an approach, and over the long term, that gives you the opportunity to profit and profit more. This approach is definitely something that can be optimized more, so that we can take advantage of these bigger moves and take advantage of the price action that we're seeing on a daily time frame. So again, using this standard deviation channel as the guide, we can see as it approaches these levels on the daily time frame, what I'm anticipating is in today's channel, and possibly even Mondays as well, that it's going to find support off of this level, and in the coming days next week we'll see it pull back and reversed with a reversion to this mean here, to the average. So obviously, if I'm entering here, that gives 4-to-1s, 5-to-1s more viable. That's not the goal at the moment. The goal is for me to show you that regardless of what broker you use, how big the spreads are, there's still an approach, or how much time you have to manage the trade. There's still an approach that you can take to get a return from the market if you're getting the direction right. Hear a lot of people complain about stop loss hunting, or massive spreads. Yes, they do have an impact on the market that you're on your trading. They do have an impact on your bottom line. And absolutely, you should find a reputable broker to trade with. But a lot of the time, I think when you hear complaints of, the spreads or being stopped out, early, it's generally because people haven't really got the direction right. They haven't made an assessment of the price action correctly, and used the lower time frames to help finesse the exit. So in this approach here, it's not pip perfect entry. It's not an exact level. That's why, often I would say, around about here, have a stop loss around about this level, because it's going to be different from broker to broker in any case. It doesn't matter so much as I think people think, because it's really just getting direction right, and it's managing the entries and exits on more of a rough estimate rather than a pinpoint kind of level, if that makes sense. So this approach here, yes, there is money left on the table. Am I sad about it? No, I'm still making the returns that I want over the long term. These, compounding helps with this. The fact that I can take bigger positions as the account grows, and also I'm looking to optimize it further down the line, trying to keep things as simple as possible at the moment in these explanations. So optimizing it to take money off the table with these bigger moves is something that is part of the longer game as well. So yeah, let's have a look at. In fact, let's have a look at something that went wrong or kind of against what I would have been in my favor. So last week, I think it was last week. This here, the USD CAD entered on 25th. So yeah, that was the end of last week. This was a short that I took out on the USD CAD. It kind of broke even, just over broke even on this exit. You can see that there, 131.25. That's where I got out, and that's roughly where I got in as well. So this I was shorting, right? So I wanted it to move down. I was anticipating it would move down, but it's definitely would have gone against me. But I got out of this early based on what I was seeing on the early warning signs on the lower time frames. We're starting to see higher highs and higher lows. Would have been other reasons as well, but there was a reason to be out of the trade. And whereas the other one on the Euro JPY did go in my favor, this one didn't. But I've still preserved capital to trade another day in both instances. So here, I've broken even, and I can trade another day without worrying that I've having to incur this loss. On the Euro JPY, I could have made more money, but ultimately I still made a profit. And much like in boxing, for example, where you're told to, the first rule is to protect yourself at all times. It's the same story here. I'm trying to protect my capital at all times, and of course, I can increase the risk. I can go beyond the 2%, 1%, whatever per trade. But if in doing that, what that does at this point is inhibit the opportunity for me to be profitable long term. And that's really the end goal. It's just to have enough capital to keep on trading, keep on letting that account grow, so that it's not adolescent. It's not an infant in terms of a size. It's really got to grow into an adult, if you like. Let that money grow without taking a draw from it. So many people, may be trading for an income. That's really not my approach in this instance. I think that letting an account compound is a really powerful thing. So a draw is basically when you're taking out a monthly or a yearly, wherever, quarterly kind of amount from the account. So you're taking money out of your capital, and that can inhibit the ability for it to grow. If you're taking, let's say, I've made £500 in a couple of weeks here, and let's say that you're taking out £500 every single month, then your starting capital is going to be very similar month to month. And you can have drawdown as well. So you're not guaranteed to make a certain amount every single month. You've got to have a buffer for when, shit hits the fan and you've had a bad week, a bad month. And money in the account allows for that buffer. In the same way as it grows, that 1% that I'm, say, taking now as £100 reward or risk, when this, if this doubles, then I've taken enough of those trades so that this doubles to, say, £20,000. That 1% is now £200 per trade. It's still the same amount of risk. It's just that powerful thing of compounding that I think people don't really pay enough attention to. It's kind of too short-sighted on the next trade. How much can I make from this? Rather than holistically thinking, right, let me just get 1% under the belt, 1%, 2%, they all stack up. They all stack up, and just have the patience to play the longer game and let your capital grow. It's just one approach to trading. It's definitely my approach. Something I've learned over the years, that you can really get make your money work for you. So let's just have a look at some of the potential setups for going into next week. We'll probably cover these more in depth in Monday session. But today, a lot of these pairs are looking oversold at the moment. What I mean by that is, see these extensions where they've kind of gone into this region where you've got the lower lows here, effectively making a potential lower low. A lot of them are coming into interaction with the standard deviation channel that put around the price as well, which is signs of it being oversold, which means the price could move away, start moving up towards the average, this middle line, or perhaps the higher edge as well, which would in both instances show better value for money than trying to short this. It's like catching a falling knife. This price has already shown its intention to move lower. You don't want to jump on this and try and grab it, because there's a good chance you'll get cut as the price starts to move higher. So in these setups, I will just give you a quick analysis based on what I see as potential. In case you're not familiar with the strategy, have a look over the other videos. But basically, I use time frame correlation and price action to determine the decision. There's 5 charts on here, so I start with the daily. If the daily is showing signs of being overbought or oversold in the respective trends, then I will look at the lower time frames. The other time frames we have are the 4-hourly, hourly, 15-minute, and 5-minute. And I use these to help with the timing, and I want these to be correlating to what the higher time frame is saying. So CAD, no, it's too oversold. So same with CHF. Again, this was another one. I can't remember if I mentioned this, but this was one that I got out here. This moves way off, so this would have been even more profitable, but I didn't know that at the time. Another trade, I'm happy with the result regardless. But this one's oversold. A lot of these AED crosses are oversold, so this one is too oversold at the moment as well. Same here, another AUD. This is CAD, CHF. No. Not really readable price action there, so no. Oh, what's going on there? EuroCAD could see some opportunity coming into next week. The reason I've got this in here is we can see that this move here, so we've got the price moving in a potential downtrend with lower lows, and these are what I'm deeming to be the lower highs. It's found a lot of resistance there. If we track this back, it's probably zonal. So we've seen support here, previous support zone there, previous resistance that it's interacted with. So it's going to have a likelihood of having some trouble moving through this level here based on that horizontal resistance. In addition to that, what makes me feel that this gives even more credence to this being a resistance area is the standard deviation channel that I put around the price. It's in a very oversold area, which almost interacts perfectly with where we're seeing that resistance from the upward move here. So as the price continues to approach this region, it's likely to be very oversold, and a good likelihood of it moving down. So what I'd be looking for, though, to make this tradable is some sort of reversal candle off of this level. So given today this candle's still forming, Friday, we need to wait for Monday, and then possibly on Tuesday, if Monday is a reversal candle off of this type of level, then the price moving past the low on the Tuesday to warrant an entry. But this isn't ready yet, so let's go on to the next one. Too oversold. No. No. No, need to see signs of reversal on this. This is, so yeah, it's nice downward price action on the daily. I would want to see, ideally, some interaction with this level, the higher standard deviation channel. But, I mean, the 4 hourly there, yeah, I mean, it's nothing, this probably wouldn't happen on Monday. Yeah, it's really just a wait and see what Monday's candle materializes as. If I see a reversal type candle, then I deem that as a lower high. It might be that it comes up and interacts with this level, which would be standard deviation channel, which would have moved down a bit by then to probably around here, which is still below this previous level, which would still be good. But yeah, so wait and see for Monday's candle on that one. The close of Monday's candle, that is. So Tuesday would be the earliest for that. No. 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 Okay, and this is Bitcoin. I don't trade Bitcoin, but some interesting price action here. So if you do, and this is a 24/7 market, so I'll break down what I'm seeing on this for you. So just firstly looking at the daily, what I'm looking at is this upward movement, so lower, higher lows and higher highs as well, which would make me bullish on this overall. And I'm looking at these previous levels here. See, this is why I don't particularly like stocks or, you know, these some of these cryptos as well. Can you see these massive gaps in the price? These gaps here. And that's why I talk about, and this is one of the reasons I don't trade on Fridays, because the gaps in Forex from day to day, Monday through to Friday, they don't really occur. Whereas a Friday to a Monday, there is a good likelihood that, you know, the price could gap. So if we look at the candles, let's just bring up another chart here. This is a daily, and you can see, look, there's no real gaps from the open to the close as you go in from one candle to the other. Now, if you look at it, you will find that this gap here, that's going to be a Friday, that's going to be a Monday. I mean, the reason I know that, look, you can look at so if we look at the dates, you can see, just look down here, look. So this was the 28th. Got the time there, so 2019 6/28, so that's the 28th. So obviously if it jumped to here, it's jumped to the 1st of July, so it's the 3 days in between. And let's say for whatever reason I was short on this, and, you know, I had a stop loss level maybe above there and a profit target down here. If I'd had that position in over the weekend, it would have jumped over my stop loss, and I would have gotten out an even worse stop price, because the open on the candle, I'm going to zoom in, the open on the candle was here, right? This level. So there's a good chance that it would have jumped over whatever my stop was. I would have got stopped out here at a worse stop, and I've just lost control over that risk that I have day to day. So that's one of the reasons why I prefer not to trade at the weekends, and I'd stick to currencies, as in FX currencies rather than cryptocurrencies or stocks, because, I mean, they're still tradable, but just not in the same way. And I feel, for the way that I trade, I do lose some control over how I can manage that risk. In any case, looking at what the Bitcoin is doing, yeah, it's a bit of a limbo. I mean, overall, there's bullishness, but you could deem this as a retrace, and it's also encapsulated in a standard deviation channel. what really needs to be done to make any definitive kind of decision is for it to break these kind of levels where I put in this horizontal. So we've seen this resistance here, and we've got some nice price action on the lower time frames. We're seeing, you know, these higher highs and higher lows. What I would want to see is for it to break past these levels. So if we look at, it's even more prominent on the lower time frames, as hourly here. There's going to be more contact points, right? Here, 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 here. It's coming up to it now. So I'd really want to see it break through there and pull back to consider any long positions on this. So yeah, there's it's kind of a wait and see. So I can see there likely be opportunities going into next week, probably midweek, I guess. But I'll keep you updated on that. In any case, I'll be back on Monday just with an overview then, just to see how things have changed since the open. And yeah, I'll see you then. Full details of previous trades are in the description link. There's a link to the MyFX book. So everything that I'm saying here is 100% transparent. You can follow any trades. You can look back on how the trade was set up. Use that for your learning experience, because it's, you know, there's no me kind of taking screenshots of false trading statements, as you'll find many educators can do. Everything that I'm saying here is trackable, is traceable. You can see, go back in time, see what I've said, see how it's panned out. And really that's the only way really I think it can be. You have to be completely transparent. And in this industry, the Forex industry, it's very, very kind of scammy, very shady in parts as well. So I think being 100% open and upfront about what I'm doing is one of the best ways that I can help educate anyone listening. So if you do find this useful, or if you have any questions, just let me know. Just put a comment below. Like and subscribe to the channel is something I'm trying to grow as well. It would be very much appreciated. But until next time, have a great weekend, and I will be online again soon. Bye.